Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 9th. My name's Eric Wilkinson, and some of you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. I do those same things here in these daily market commentaries. I talk about the economic data, geopolitical stuff that's going on, how that impacts the overall markets, and then we layer on top of that trades using options and the trades that I use using options based on the assumptions I come up with for the economic and geopolitical environments. It is not a recommendation, so please do not take anything I say and or do as a trade recommendation. All right, anyway. Let's get on with the economic data. It being a Monday, there's not a whole lot going on, but what the heck is going on in the overall markets? Well, here we go. Let's start it out with across the pond over in the Middle East, Saudi Arabia basically trying to bludgeon the rest of the world with the fact that Russia basically said that they were not going to comply with OPEC. We talked about that last week. Russia walked away from the table. Well, over the weekend, Saudi Arabia said they're going to ramp up production. Saudi Arabia themselves going to ramp up production from 10 million barrels a day to 12 million barrels a day, and the rest of the crew is expected to follow suit and start pumping it out there to try and drive these prices lower. And as you can see here, futures are predicting that that is going to happen there. Well, this just seems a little bit bizarre. They're trying to punish Russia and the frackers here in the United States because we've talked about this. Anything below 50 in crude oil makes it very difficult for the frackers to have profit. Down here at the 30s, these guys are not going to be profitable. They will start cutting back on production. Well, that pushes, I guess, money over to Saudi Arabia and the Middle East because those guys have a lot of oil, very easy for them to produce that oil or pull that oil from the ground. We talk about it this way. In Saudi Arabia, they have to remove the rock from the oil, basically put it through a filter in a sense. Here in the United States, we have to remove the rock or the oil from the rock, which is much more difficult of a task. So that is more cost intensive. So we've got crude oil crashing based on the fact that they are going to pump oil, and we already have a glut of oil. I've already talked about gasoline and distillate inventories really rising right now. Well, this is going to add to that whole glut of oil on the market and then those distillate products. So we see crude oil coming off quite a bit. I don't know how much we're going to see that show up at the pump, but we very well could start seeing that. I like that idea. Yes, it's going to hurt the oil producers. They still have offshore rigging and stuff like that that they can still pump oil with. But lower oil prices right now, especially during this pandemic type thing we have going on with coronavirus or COVID, whatever they're calling it, whatever it's actually called. I can't think of it right offhand, getting a brain cramp here. But anyway, y'all know what I'm talking about. That could get people, hey, you know what? Gas is so cheap, I might actually start traveling. Another thing is, this coronavirus thing is completely overdone to the upside. I've talked about this. I think that it's just ridiculous that there is such a pandemic. People are rushing to Costco to get toilet paper for a respiratory disease. People are not thinking clearly, you guys. If you guys remember back during the Obama administration, we had something called swine flu, or it was called H1N1, I think is what it was called. There was over 60 million cases here in the United States. 60 million cases here in the United States. 12,000 people died from it. And there was nothing, you guys. There was no pandemic like we're seeing with this coronavirus. Yes, people are going to get sick. Yes, there are people that are going to die. But we even put influenza into that bucket, right? Think about influenza. It kills 3,000 to 5,000 people a month, all right? And people still don't want to get their vaccination shots or the vaccines and stuff like that. So, the flu shot. So this is completely overblown. Media is just in a lull session, so they need to blow something up, and this is it right now. We're also heading into an election, and keep that in mind, where you're getting your news sources from and what their ultimate directive is, to be honest. All right, so put it all into perspective. I think the markets are starting to realize some of that. I don't really expect crude oil to make a massive comeback, but I do think that we have created a capitulation type thing. I've been waiting for the capitulation. I don't know if it's really happened yet, but it just seems like people probably are going to have the light bulbs start to go off here. All right. I think that has to be the case. I mean, people really have to start thinking sensibly here moving forward. So without that further ado, let's get on with the overall economic data here, or not the economic. Let's get on with the market. We've got crude oil off, testing $27 a barrel. Look at that. I mean, we are well off the lows by about $6. I mean, it was down almost over 20% at least earlier today. So we're off those lows. People are starting to buy up crude oil. I think it could probably stay down at these levels below 40 for sure, as Saudi Arabia and the rest of the oil producing nations over in the Middle East are going to be trying to hurt Russia in the United States with the pumping of extra oil out here onto the markets. Good for the consumer, though. We are going to be having cheap gas prices. I've talked about this. Cheap gas prices means more velocity of money, all right? So we're going to see that people are not having to spend as much in gas, and they will be able to spend that elsewhere, like at Starbucks, McDonald's, or whatever your fancy is, on spending those extra dollars per week. If you think about a $60 fill up when oil is up around $60, we're talking $3 plus, maybe $3.50 a gallon in gas, and you're filling up 15 gallons every time. You can see where that money now, if it's down around $2, it's $30 versus what was then before almost $50, right? So $30 versus $50 a week, you got $20 extra to spend elsewhere. That creates the velocity money, because you and I are going to be spending that $20 differently, completely differently. You might be buying Starbucks, I might be going out and buying In-N-Out Burger. All right, so that being said, all of that money gets put into the economy differently, and then those retailers will spend that money differently as well, and that creates that velocity of money. All right, gold futures coming off below 1,700 a troy ounce. I thought we had some tweezer tops going on Friday. We talked about that. That looked like a pretty darn good top, but today with all of this information blowing the top off of gold, but we are seeing a pull from gold, and I think some of that's getting put into the equities here. People are starting to realize there is value out there. We've got the bonds. If it's a matter of, or these are the 10-year, sorry, I keep forgetting I have the 10-year notes up here. The 10-year was sub 50 at one point, and we had the bonds trading around 50 as well. So we got rid of that one handle in the bonds. I don't know that we're going to be able to sustain this. I don't think we're going to see negative rates here in the United States, you guys. I think that the market's going to hold on. Yes, the Fed might go ahead and cut 50 basis points at the next meeting. But again, you guys, this whole pandemic is completely overdone in my eyes. If you just put everything into perspective, like with influenza, the swine flu versus what coronavirus is doing, yes, we are doing a lot better at containing the coronavirus than we did those other ones. But at the end of the day, it isn't as or any more deadly than the rest of the flus we've seen. It's just a media-driven event. So you guys, I hope nobody's capitulating today. Because I think that, like I said, this is a little overdone. Bonds up 4 points, bonds up 4 points on the day. VIX spiking up into the 60s off of the big sell-off, and the Dow was down about 1,800 points on the day. It is trying to make a comeback. You can see it's still down on the day, but down only about 1,300 points. If we throw a line in the sand up here, we could probably figure it out. 23.8. So we are about 700 points off of that low, give or take, So Nice big rally back, down almost 2,000 points in the Dow earlier. Right off of the open, the market just got slammed and hit those lows. Again, you'll see that show up here in the NASDAQ. Down 300 points right now. Back above the 200-day moving average, something to keep your eye on. And our Fibonacci extensions that got a little bit out of whack there, but I always leave my Fibonacci's up there. But you can see we're back above this 8165 area, which is going to act as support. So we can see the NASDAQ down 300 points, but well off the lows when we hit 7820. So we are another 7820, the low overnight. So we are basically 500 points off of those lows that we saw there. And E-mini S&P's down 130 points. It is below the 200-day moving average, which is way above here, but trying to make its way back to that point of control at 2,900, which is where the most time and volume has been spent. So we're a little overextended to the downside. We tested that value area low earlier today. That's where I think people started getting that signal like, hey, wait a second, this is just absolutely crazy. We have a really good economy. Doesn't mean that we aren't going to see slowing down, some loss of jobs, especially through the transportation and leisure and stuff like that. But if people would just get a hold of themselves and stop rushing to buy toilet paper at Costco and, just really take a deep breath and realize the insanity of all of this. So let's take a look at the E-mini S&Ps overnight. You can see that's where, as soon as the market opened, most of this had to do with Saudi Arabia talking about slamming the market. It wasn't like we saw a huge outbreak. We did see the U.S. government really start to say people should stop jumping on cruise ships and stuff like that, which is going to hurt the economy in certain sectors. Again, that's that travel and leisure, right? If people aren't traveling, they're going to be not spending that money elsewhere. They would be hoarding more money in a sense, where we would like to see them spending, especially at a time like right now. But as the day session opened up, you can see that's when we got that feeling like that capitulation moment. The basically retail investor came in, those guys that were out buying toilet paper, like 10 or, I don't even know how many comes in those toilet paper rolls, but I'm thinking there's probably close to 48. So they were buying like hundreds of rolls of toilet paper, literally pulling a cart up and throwing like 3 or so things on there. It's not like the toilet paper guys are going to stop producing toilet paper. I mean, it's just, those are the crazy things. I think if people would be going out there and buying alcohol because they've been looking at their 401k over the weekend. Anyway, so we've got the Dow Jones near the highs of the day session, and market's trying to make a bit of a comeback. I have not done anything with my portfolio. Yes, it does not look pretty, nor does yours, I'm sure, but I'm going to hold on to some of this stuff. I might be very well getting long Microsoft in my portfolio and a couple of other things. But at this point in time, I think that this is absolutely overrated. And you can see volatility already starting to come out of the markets as the day progresses and we start seeing some of that market move higher. I think that institutional buying is really coming in force after that whole initial retailers came in and just had some panic selling going on. So there is value out there. Just do your homework, start digging for it, and look for companies that you think will do well, like Facebook being down. Yes, they might get hurt a little bit on ad revenue, but that ad revenue coming from people trying to advertise, maybe they're going to cut back, the companies cut back on that spending for ad revenues. Well, if more and more eyeballs are on it, I think that that will help that on that side because people are staying home. I mean, there's a lot of companies that are telling people to stay and work from home. They're giving that a shot. So what's going to happen? We're going to see some of that productivity slack off because people are going to be on Facebook and or Fortnite or whatever they do online during the day when they weren't at work. So keep that in mind. There's got to be opportunities out there for you to take advantage of. I don't know that I would just be in the same camp as me trying to get along some Disney down here or some of the other travel and leisure kind of things. But at the end of the day, things like Coca-Cola, people aren't going to stop buying. I don't think people are going to stop playing on their computers. So those are definitely opportunities in the markets that you might want to take a look at. But keep in mind that everything we talk about in these daily market commentaries, my webinars, everything else is for educational. We're trying to educate you guys on options, how those can be implemented into your portfolio by following certain rules and guidelines in order to increase your probabilities of success. Think about it. We got high volatility right now. If you're buying calls or something like that, that is probably not the right thing to be doing right now. One, it may not be, we have kind of quote unquote turned into a bearish market. And two, volatility is too high to be buying calls at this point. All right. So there's other option strategies that would be more appropriate for your assumption in this type of environment. So check those out at protraderstrategies.com. That's all I got for you. But take a moment to go over this disclaimer. And if you can't take that, take it easy.